If you ever wondered how big buildings, shopping centers, and office parks actually make money, stick around because we're going to break it all down for you today. Hey everyone, welcome to Nothing to Hide, your straight talk source for everything commercial real estate. I'm Harrison Hyde, commercial broker in Greater Los Angeles area, helping guide owners, investors, and tenants with the sale, purchase, and leasing of their commercial assets. This channel is dedicated to one thing: commercial real estate, and making it make sense for everyday people like you and me. Now, a little about myself. Real estate career started young when I was collecting quarters from our washers and dryers at my family's apartments. Growing up, I had the chance to watch my family and their partners create wealth through investing in commercial real estate. I didn't know it then, but those experiences would lead me into a wild and fulfilling career in real estate. After graduating college, I remember when I first started looking into commercial real estate. Like many people, I felt completely overwhelmed, even with my early exposure to the business. The terminology was confusing, the deals seemed massive, and I had no idea where to even begin. So I made it my mission to learn, and now I want to share everything I've discovered with you. That's exactly what this channel is about. We're going on a journey together, learning the ins and outs of commercial real estate from the ground up. This channel is your inside look at commercial real estate, the deals, strategies, markets, and the people making it happen. We break down cap rates, NOI, lease structures, marketing trends, and everything in between in a way that makes sense. All right, let me walk you through some of the topics we're going to cover on this channel, because I want you to know what you're signing up for. The first topic we're going to talk about are the fundamentals of commercial real estate. We're going to break down the different asset classes: office, retail, industrial, multifamily, hospitality, and mixed use, and explain how each one works, how they make money, and what you need to know before you ever set foot in a deal. The next thing we're going to talk about is how deals actually get done. We're going to walk through the deal pipeline from start to finish, how properties get listed, how buyers and sellers find each other, what LOIs and purchase agreements look like, how due diligence works, how financing comes together, all of it. Next, we're going to look at market trends and analysis. The commercial real estate market is always moving. Interest rates, vacancy rates, economic cycles, remote work trends. We're going to analyze what's happening in the market and what it means for investors and professionals. After, we'll check out the backbone of deals, commercial real estate finance. This is where people get intimidated. Cap rates, NOI, cash-on-cash returns, debt service coverage ratios, LTV. Understanding the numbers is what separates successful investors from everyone else. Last topic we'll look at is real estate deals and case studies. We're going to look at real commercial real estate transactions, what worked, what didn't, and what you can learn from them. This is just the tip of the iceberg as we delve deeper into commercial real estate as a whole, and we're dropping new videos every week. Before I continue, I want to stress one thing. This channel's not a get-rich-quick channel. We're not going to talk about making millions with no money down or flipping properties with zero experience. That content's everywhere, and most of it's garbage. Commercial real estate is a serious business. It takes time to learn, it takes relationships to build, and it takes capital to execute. What I can promise you is that if you put in the work and use this channel as a resource, you will be way ahead of the game where you'd be otherwise. If you made it this far, I genuinely appreciate you. It tells me you're serious, you're here to learn something, and that's exactly the kind of person this channel was built for. Here's what I need from you. Before you click away, subscribe, tap that button right now if you haven't already. Next, make sure to drop a comment below. Tell me where you're starting from and what topics most you want me to cover. All right, let's get into it. Today we will dive into the basics of commercial real estate. Whether you're a seasoned investor, a business owner looking for space, or someone just starting to explore the world of real estate, commercial real estate is one of the most powerful wealth building tools available today. Let's break it down from the ground up. So what exactly is commercial real estate? Commercial real estate refers to any property used primarily for business purposes or to generate income. Unlike residential real estate, which is where people live, commercial real estate is where businesses operate, where goods are stored and distributed, and where capital is put to work. There are 5 major property types you need to know. Office, think your downtown high-rises, suburban office parks, and co-working campuses. Office spaces where companies house their teams and operations. Next is retail, which is strip malls, shopping centers, grocery-anchored plazas, big box stores. Retail space is leased to businesses that typically sell directly to customers. After that's industrial. warehouses, distribution centers, manufacturing facilities, and flex space. Industrial recently has become one of the hottest sectors thanks to the explosion of e-commerce. The one that you're probably more familiar with is multifamily apartments. These are complexes and large residential communities. Anything with 5 units or more typically falls under commercial classification. Finally, we'll look at specialty and mixed-use properties. These can be anything from hotel, self-storage, medical office, mixed use, which is typically retail on the bottom, apartments and condos up above. Each property has its own demand drivers, risk profile, and investment considerations. Now let's talk about valuation, because understand how a property is priced is everything. In commercial real estate, value is driven primarily by income. The more income a property generates, the more it's worth. This is fundamentally different from residential real estate, where comparables, what your neighbor's house sold for instance, drives the pricing. The most important metric in CRE is net operating income, or NOI. NOI is the total revenue the property generates, typically from rental income, minus all your operating expenses, excluding the debt service. Think of it as the property's cash earnings before the mortgage. From NOI, we calculate the value using cap rate or capitalization rate. This formula is simple. The value equals NOI divided by the cap rate. So for instance, if a property generates $100,000 in NOI and the market cap rate is 5%, that property is worth $2 million. Cap rates reflect risk and market conditions. Low cap rates means investors are willing to accept the lower yields, typically in higher demand, low risk markets, and then higher cap rates signal higher risk or lower demand. Other valuations you're probably aware of are the sales comparison approach and the replacement cost approach, but the income approach is king in commercial real estate. Leases are the engine that drive commercial real estate, and a property is only as good as its leases. There are 3 primary lease structures you must understand. Gross full service lease. This is when a tenant pays a flat rent and the landlord covers most of the operating expenses like taxes, insurance, and maintenance. This is commonly seen in office buildings and other mixed-use properties. The next is a net lease, where the tenant pays the rent plus some or all the operating expenses. In a triple net lease, the tenant pays rent, property taxes, insurance, and maintenance costs. These are beloved by investors for the predictability. You'll also see triple net leases frequently in retail, think fast food chain or pharmacy. The last is modified gross lease. It's a hybrid. Expenses are split between the landlord and the tenant based on negotiated terms. Key lease terms to know include lease term, how long the lease is, base rent and escalations, how rent growth over time can be anywhere from 2 to 4% annually. Tenant improvement allowances, which is the money landlords give to a tenant to build out the space. Abated rent, which is free or deferred rent, and then options to renew or expand into a neighboring space. The quality and length of leases and creditworthiness of tenants are central to the property's value and investor appeal. When an investor or company decides to acquire commercial property, the process involves several critical steps. It starts with underwriting, where investors analyze the financials to determine if the deal makes sense. Investors model out cash flows, expenses, financing costs, and projected returns. Then comes due diligence, a deep dive investigation before closing. This includes physical inspections, title searches, environmental assessments, zoning verification, and a full review of existing leases and tenant financials. Key return metrics include cash-on-cash return, which is the annual cash flow divided by total cash invested, which measures the current yield or how much the investment pays you. A little more sophisticated is the internal rate of return, the IRR, the total annualized return over the life of the investment, accounting for the time value of money. Basically, that acts as a way to measure if you're getting a better return on your investment now than you would investing your money somewhere else. The last one people commonly use is an equity multiple. It's the total dollar amount returned divided by the dollar invested. For instance, a 2x equity multiple means you double your money on a deal. Financing is also a major factor. Commercial loans are typically structured differently than residential mortgages. Shorter terms, interest-only periods, and a higher scrutiny on the property's income rather than the borrower's personal income. You've heard it before, location's everything, but in commercial real estate, it's more nuanced than that. We analyze markets at 3 levels. Macro, which is the national economic trends, interest rates, and employment. Metro, which is city-level supply and demand, population growth, and business climate, and specific submarkets, which are specific neighborhoods or corridors where the property sits. Key market indicators include vacancy rates, the percentage of available space not currently occupied, and absorption, how much space is being leased or filled over a period of time. Positive net absorption means demand is outpacing supply. We also look at rent megatrends, new supply coming to market through the construction pipelines, and major demand drivers unique to each asset class. Things like logistic demand, for instance, in industrial, population growth for multifamily, or employment growth for office. Market analysis is where deals are won or lost. If you want to learn how to read a market like a pro, subscribe to this channel. We publish market updates and deep dives regularly. Much like residential, it takes a team to complete the sale of a commercial property. A typical transaction includes owners and investors, which can be individuals, family offices, REITs, pension funds, and private equity firms who own the assets. Tenants, who are the businesses that lease the space. Brokers, who help with the leasing and investment sales, represent buyers, sellers, landlords, and tenants. Lenders, which are the banks, insurance companies, debt funds, and agencies providing financing. Property managers, which are the firms that handle day-to-day operations, maintenance, and tenant relationships in the buildings. And then attorneys and consultants, which are legal, environmental, advisory professionals who support the transaction and compliance. To wrap things up, commercial real estate's created more millionaires and institutional wealth than almost any other class in history. But success in this industry is built on fundamentals. Understanding how properties generate income and how they're valued, how leases work, and how markets move. Whether you're looking to invest or lease space for your business, mastering these fundamentals is key to your success. Business deals go to those who do their homework, understand numbers, and know the market better than anyone else in the room. If you have any commercial real estate needs in Long Beach or the greater Los Angeles area markets, give me a call or shoot me an email. My contact information is below. If this video gave you value, please give it a like, drop a comment below with any questions, and most importantly, subscribe to the channel. This is Nothing to Hide, your straight talk source for commercial real estate. I'm Harrison Hyde, and I'll see you on the next one.